Hello everyone. Today in this video, we're going to look at four stocks, from four different sectors, which are looking really good in terms of the risk and the reward that these stocks have in terms of the potential in the short term, probably in the medium term as well. Now, these four stocks are really good, profitable. In fact, the ROCE are pretty much above 15-20 levels, and even the ROE is good. But the PE is kind of little undervalued, and I feel these four stocks, can do well in the coming weeks and months. Now, before we start off with the stocks itself, I want to discuss about the video that I posted last week on Shraddha Copchem. Now, Shraddha Copchem, we identified the stock around 400, 410 levels, and today it's trading around 600 levels. Now, that's almost a 50% return in just a couple of weeks. Now, there is a myth, amongst the mutual fund investors or amongst the mutual fund industry who keep spreading that you cannot time markets. Now, I kind of slightly disagree to that. In fact, I kind of, disagree to that completely. Now, obviously, the probability in markets, you cannot time each and every stock. You cannot buy each and every dip, and sometimes you make money, sometimes you lose money. But if you're able to control your losses, and if you're able to control, your exit points, and if you have that clearly in your mind, I do think that you can definitely time markets. And the first stock video that we did for this year, and that Shraddha Copchem is the best example for that. Now, that stock is up almost 50% since we did the video last week, and I hope a lot of you have bought it already and you're holding it. Now, in case you did buy it after looking at my video, or if you did do your own analysis and then you bought it, then do let me know in the comment section, and also that it motivate me in order to so that I can do more videos for you and for everyone. So without wasting more time, let's get into the stocks for today. So there are four stocks, and all four stocks are good, as I said. Let's look into the stocks directly. Now, that's Shraddha Copchem chart, but that's not the stock we're going to discuss today. We're going to discuss the first stock, which is Avanti Feed. Now, most of you would have heard of Avanti Feed, back in this rally, in the last bull run that we had in 2017-18. The stock went up all the way from, very penny stock. It was a penny stock from 1 rupee, went all the way up to 800 rupees. But since 2017, this stock has not done much. So that's since October 2017, the stock has not given much returns to investors. So it's been 4 years now, and most of the investors who bought it this high are still in losses. But this stock is forming a very interesting pattern. Now, what we're going to look at today in all the four stocks is multi-time frame analysis. The multi-time frame analysis can help you identify stocks in a timely manner, and you can probably invest in those stocks at probably a right point, which might immediately put you in profits, right, with a small risk. Now, this stock, if you see, Avanti Feed has been, in a downtrend since 2017, and I'm just connecting these lines. So these are trend lines, and these trend lines work really well, especially when there are multiple touch points. And now that's what we're looking at here. Avanti Feed has, this was the top in 2017, then we had this high, then this high, and this high. Now, since the last few months, so since this breakout over here, so this stock had a breakout, and since that breakout there, this stock has been hovering around that breakout zone. Since that May 2021, the stock has been going sideways, and it's in a very tight range. And I feel that this stock is now priming or is really setting up nicely for a very good breakout in the coming days or months. So probably I'm expecting a very strong breakout in the next 1 month or so, and it can happen probably tomorrow, it can happen probably next week, or in the next coming month or so, but we don't know when it's going to happen. So we'll keep a stop loss and we'll trade the stock. Okay, now jumping into the lower time frames here, just to see what's happening in the lower time frames. By time frame, I mean the charts that I'm looking at monthly first to look at the overall trend of the stock. Then I'm looking at weekly chart here. Now on the weekly chart here, if you see, this stock has formed a very clear base around these levels, right? So that's a very strong base for the stock. Now I don't expect the stock to go below this anytime soon. Probably it might happen 6 months, 1 year from now, I am not sure, but for me the probability right now is in the upside, and I see a lot of potential for this stock to head higher from here. So the last time frame, especially is daily time frame. So in daily time frame, again, if you notice here, the stock had a breakout from this zone, and the stock kind of went higher, and it's kind of consolidating and going sideways. So obviously the first question is, at what point do I enter? Now there are 2 points of entry that you can look at. Now if you're a conservative investor or a conservative trader, then you can enter the stock above 634 levels. But for me, I don't really care. Once I find a nice setup, I just keep a stop loss and enter. So if you're really conservative, then enter only above 635 levels. But for me, I would enter right now at this point, with a stop around 550 levels, which is the swing low. Now that's just a 10% stop. So 550 to 610 is just 60 points. So it's a 10% stop, and we're looking for much higher targets here. Probably the first target that I'm looking forward to is this high, which is 770, and then probably I'm going to look at 960 1,000 levels in the coming weeks and months. Okay, so that's the first stock, and that's a technical analysis which I've done. So multi-time frame analysis helps you identify good stocks. Okay, so I'm just looking at the fundamentals as well. Now, fundamentally, this stock, as most of us know, is a very excellent stock. In fact, it's a good stock, an excellent stock to be invested in, and it's the right time to invest right now, according to our technical analysis. So this company is in the shrimp business, as most of you might already know. It has a very good ROC, ROE, and the stock is trading at 32 PE. It was trading at a much higher PE, many years back. So if you look here, the stock was also trading at a PE of 40 levels, right? So today we're trading at a level of 30, and we might not go very high, probably not expecting a multi-bag returns here, but we're looking probably for a 50% return from here, at least in the next few months, right? So that's the target we're looking for, at least in the short run. So the sales have been pretty decent of late. It has gone up to 1,400 crores now. The margins have come down a bit, but that doesn't really matter. But what I have to look at, the trend is the company has been doing very, really good sales, and the sales is kind of hovering around the 4,000 crore mark, and the profit is around 360 crores, right? So overall, I think it's definitely worth looking at. This company, the promoters are holding a 43% stake, and here if you see, DIs have been increasing stake of late. So they've gone from 3% to almost 6%, and that's probably why the reason why the stock is going in a tight range, because it's been accumulated by DIs, and that's one of the reasons the stock is going sideways. So that's the first stock that we're going to look at today. And now, before you invest in the stock, you need to understand how much to allocate, right? So the stop is 550, you're buying at 610, so that's a 10% stop. So you can allocate around 5% of your capital to this stock. So even if the stock comes down and hits your stop loss, you will not lose more than 0.5%, right? So if you want to take more risk, you can go ahead and invest 10% also, and if the stock hits your stop loss, you'll lose around 1% of your capital. Now that's really, really important in terms of allocation. Allocation is what brings you money. So don't allocate a random amount of money, like 10,000 or 15,000 out of the 10 lakhs in case you have. So if you have 10 lakhs, try to allocate at least 50,000 to the stock, so that if it does move ahead according to expectations, then it might give us some really good returns. Okay, so that's the first stock from our list that we want to discuss today. Now the second stock is kind of a small cap stock, from the oil space. By oil, I mean the edible oil space. I'm not sure if castor oil is edible, but it manufactures castor oil, and that stock is Jayantagro. Okay, so Jayantagro, again, as I always say, start with the monthly time frame here and look at what the stock has done in the last many years. Now this stock had a very strong breakout back in 2016 May. It went from all the way from 70, it went to 400 levels, 500 levels. Then it came down, kind of retested that breakout zone here, and now again it is heading higher. Now I'm just going to the weekly charts, weekly time frame, to see what the stock has been doing. So on the weekly charts, if you see, this stock has been forming kind of an inverted head and shoulders. So that's the left shoulder, the massive head, and the right shoulder, right? So the right shoulder is probably forming, and this stock is if you see again, like we saw on Avanti feeds, the stock also is forming a nice base, and the stock is not going below that. Now we had a similar kind of a structure in Avanti where there was a spike. Now that's probably a shakeout that happens in most of the stocks, and it looks really good, this stock. And what's happened in this stock right now is we've had a breakout in this stock, right? So we had a breakout there. So in this week we had breakout, and then kind of retested that breakout, and now it's probably setting up to move higher from here, right? So if you look at this daily chart, so this is the daily chart, and we had the breakout, trendline breakout, then retest, right? So now this stock is really looking good to head higher from here, and we might see much higher levels going forward. So obviously the next question is, at what point you have to buy. You can buy at current market price, but as I said, if you're conservative, then buy at only 240 levels, which is the previous high, and it's hovering around the 240 levels. But as I said, I would buy it at current market price, which is 235 levels. I'd buy it 235 with a stop at 200 levels, right? Or you could keep a stop even at 209. So 209 or 200 as a stop, you buy at 235 levels. So the nearest first target I'm looking for is 275 levels, and then I'm looking for next target of around 500 levels, which is probably 100% return in the next couple of years or so, right? It can happen in the short term, probably it might take a few months. It might happen in the next 1 week, 2 weeks also, right? So you never know. But for us, what is important is it is forming a beautiful base. So inverted head and shoulders, the left shoulder and right shoulder almost have the same neck, same level. So if you see, it's the same level here as well. So that's what is giving me confidence, and that shakeout there is giving me more confidence to see that this stock has much higher potential to go on from here. Right now, other important thing to note here is the trend line reversal that I'm looking at. So if you just draw this line here, then you see that this stock is also done a trend line reversal. I'm sorry. Yeah, so the stock also has done a trend line reversal. So that's a nice, beautiful trend line there. And the stock has reversed from the trend line once, twice, and the third time, right? So that's why my stop is that low, and I'm expecting the stock to do well going forward. So that's the technical analysis of Jayantagro. Now, in case you don't understand technical analysis, right, there are a few stock videos that I have in my channel, for example, horizontal breakout strategy, and a lot of other videos. You can go ahead and check out them, and you might learn, technical analysis from those videos. So looking at the fundamentals again, as I said, most of the stocks we're discussing today have a low P, whereas the ROC and ROA are pretty high. Now in this case, if you see here, ROC is 16, ROA is 13, whereas P is around 9, right? And it is involved in the manufacturing of production of castor oil, and it's probably one of one of the leaders in this segment. Okay, now going to the sales, I'm just looking at the sales. Now sales last time, so the highest sales now is 642 crores. Now last time they had the highest was back in June, and I think they're getting back to that level after the pandemic. They probably they couldn't make much business maybe back in June or last many quarters, but they seem to be picking up in the business, and also the profits are coming back to, it's in fact one of the highest profits that they've been seeing, in the last many quarters. So the sales have been pretty good. As I said, 2,500 crores, pretty good. And it's been in a steady uptrend, and even their profits is almost reaching an all-time high this year. And it's a pretty good stock to be in. And promoters are holding a good 66% of the shares. And overall, fundamentally, also the stock looks good. Right now, obviously, if you want to look at a few other things, you can go here and look at the sales. The sales has been a good uptrend before that pandemic. And also the P ratio, if you want to look at, it has been, it was trading at a high of 7 P, and today it's trading at a P of 10, which is pretty low, right? That's why I call this stock as undervalued, and I feel that this stock can do well going forward. So that's the second stock, from the edibles oil space, and the stock does look promising. So two stocks we have covered, Avanti and Jayantagro. In case you like my analysis, don't forget to share the video with your friends, or don't forget to subscribe to the channel, because we have two more stocks we'll be discussing, and there'll be more stocks coming in the next weeks. So you don't want to miss out on them, and you don't also miss out on the learning that you get from my videos. Okay. So the third stock that we're going to look at today is Morepen Labs, or Morepen Laboratories. Right now, this stock is a fantastic company in terms of fundamentals, and the stock has been going sideways for quite some time now. And I feel that this stock correction is complete, and we might head higher from here going forward. And fundamentally also, the company has been posting, year on year increased profits, increased sales, and the PE also is not that high in terms of valuation. I think it's pretty decently valued, and it has much more potential to give much higher returns. So let's look at the technical analysis as always. So Morepen. So again, there's a trading view. If you don't know how to use a trading view, this I'm using, you can check out. There's a video about basics of trading view, which I've done. You can check out that as well. Okay, so now Morepen, what Morepen has done here is it has broken out back in April 2021. It has done pretty well since that low of 7-8 levels, right? It's already up 10x, not 10x, 7-8x, and it's doing pretty well now. Now, what I'm going to do is I'm going to the weekly charts and the monthly charts. If you see, the stock has been kind of forming a base around that zone. So again, as I said, in Avanti and in Jayantagro, stocks always form a base before they head higher, especially after a very strong move. Most of the stocks tend to make a strong base. Now, this is almost a 8 months consolidation and 8-9 months consolidation, and I feel that consolidation is almost getting over, and it's probably set to head higher, right? So, so the stock also has been facing resistance around 60 levels, right? So it's almost rectangle consolidation which is happening around the 60 zone, and I see a lot of potential for the stock. Once it crosses that level, it can head head higher from that levels. But today what I'm going to look at is a trend line here, which I've been looking forward to in many days. I've been tracking this stock always, and if you look at this trend over here, so this stock after this move up, it has been trending like this within that trend line there, right? So you can also switch off right now in the log chart. You can also go to linear chart, and you also observe that even in the linear chart, this stock is kind of reversing from a trend line support, right? So that's a primary trend line on the linear chart. It's kind of reversing exactly from the trend line. It has retested the trend line completely and is reversing from that line, and that's why this stock looks fantastic. We'll also look at the fundamentals shortly, but that's one of the primary reasons why I'm looking at the stock right now. Okay, now in terms of stop loss, the stop loss here is 47, or you can keep 46 as stop loss as well. The current market price is 50.7, so you can invest at right now at this point, or if you're conservative, then buy the stock only above 60, 61 levels, right? Or even 60 is fine. But I would buy it right now at this point. As I say, always say, if you know your point of exit, you don't have to worry at what price you're buying. It's totally fine. Right now, interesting part is that this stock, as I said, is trading in a range, and now at least I'm expecting a 14-point move. Once it breaks out of 16, I'm expecting a first target of 75 levels, and that is already a very good 50% return from here. And then probably I'm looking forward to much higher levels in the stock, probably towards levels of 100 also, probably in the next few years or so. So that's the third stock from the pharma space that I want to discuss today. Now let's look at the fundamentals. So fundamentals, again, screen out in case you don't know how to use. There is a blog that I have. Go and check the details on the blog. I've given a detailed view on how to read the fundamentals also for a company. Okay, so the stock is obviously a small cap stock. It's trading at 23 PE, ROC 21, 29. That's very good. Only thing is promoters don't hold much, but that's not really a concern for us, right? Now, just looking at the PE, if you want to look at the PE, you can look at it. So it was trading at a very high PE back, at 17. Today it's trading at just a PE of 20. Now that shows, even though the EPS has gone very high, the stock has not performed, that much. Even though the company has increased, say, its sales and profits, the stock hasn't performed that well, right? I mean, not that, I didn't mean to say the stock has much more potential to go higher from here, right? That's what I meant to say. Now look at the sales. It has been having a very strong trend in terms of sales. It has gone from 200 crores to 400 crores in just a matter of 2 years. And the profits have gone from 9 crores to 40 crores almost, right? Now looking at the yearly trend, so in the last 5 years, it has gone from 600 crores to almost 1200 crores. So it's a double in sales, while the profits have gone from 24 crores to 120 crores or 100 crores of late, right? Now that profit growth is very good in the last 3 years, and that's one of the primary reasons why I'm looking at the stock today. And also debt has completely come down. It's almost nil debt. And as I said, promoters hold only 34% shares. Right now, this out of the 4 stocks I'm discussing today, this is my highest conviction in this stock because it's fundamentally very good and is also reversing from a very primary trend line. Now, that's one of the reasons for me that today, if you ask me out of the 4 stocks that I'm discussing today, which stock that I would be investing heavily in terms of the money that I'm going to allocate, this stock is probably going to be the best stock. It's just a 10% stock, but you're looking at probably 50-60% returns, and that's going to come probably in the next few months, and that's a really, really, really good risk reward. And I would really urge you to look at the stock and just set up the stop loss. And there's always a risk, right, in stocks and markets. So if you feel that the stock hits your stop loss after I've told so much, that's how markets are. So you need to take a risk and you need to see if it works out. If it works out well and good. Otherwise, you have to just be patiently waiting for your next opportunity. So that's the third stock that I want to discuss today. Last stock that I want to discuss is from the metal space. Now, metal space has been consolidating for the last 1 year or so. Not 1 year, probably last 9 months or so. And many stocks have been going sideways. They have not corrected very much, but they've been going sideways. Now, a sideways consolidation after a very strong move in markets is a very positive sign, especially if they are coming close to a primary trend line and it's reversed from a primary trend line support, like how I showed in Morepen, or you could even look at Jayantagro. So all these stocks are looking good because they're reversing from primary trend line support, and that's a very good support for the stock. And also the stocks are really, very low risk levels. So let's look at the fourth stock today, which is Nmdc. Now, Nmdc is my second, probably because the second biggest conviction for me today amongst the 4 stocks because of the very good fundamentals again, and the stock has a lot of potential in terms of heading higher from here, right? Now, just looking at, I did post Nmdc in my Twitter some time back, right? So if you look at this chart, this chart has been, the stock has been in a downtrend and kind of has done a retest now. The monthly charts, it came all the way, it went to 200 and it is corrected almost to 125 levels. And this month in December, we had a nice beautiful doji, and the stock never closed below that low it made in September, right? So it's almost around the same level on a monthly basis. And this month the stock is kind of going inside bar, you might call it. And on the weekly charts, if you see, and also if you see, this is a kind of retest of this breakout here, right? So there was a breakout, that was the first breakout of 128 levels, and that was also a major breakout in terms of higher lows, and it's kind of retesting that level, and it's probably heading higher from here, right? On the weekly charts, if you again look at the weekly charts, as I said, we observed this in Avanti, we observed this in Jayantagro, the same kind of a shakeout we had back in December third week, right? And again, the stock is kind of going sideways, forming a rectangle consolidation, and it's going between 150 and 120 levels, right? So that's the consolidation that's going on. It looks brilliant because these kind of consolidations usually tend to break out and head higher. Now the next interesting point for me here that I want to show you is this reversal which happened here, right? Now this stock, this is a primary trend line support since March 2020. We had that reversal there, and again we're having a reversal in December, and again we're kind of reversing from the same zone now. Now if you look also from the downward downward trend line, we're also looking at this trend line here, which also looks really pretty good, and the stock is kind of coming out of the trend line. It's not been able to go inside again, so it's kind of, after this breakout, it's just going outside the trend line and it's closing outside the trend line, which is a very good sign for me. And for me, I feel the stock has much higher potential to head higher, primarily because of this trend line reversal, right? And also it's a breakout retest, and we can see some good moves in the coming days, right? So you can buy the stock at current market price. It's right now around 138 levels. You can keep a stop around 125, right? So that's 13-point stop, or just exactly 10% stop. Now all these stocks that I'm discussing are really low risk, so 10% stop is something really less for investment. But we're looking here for targets of 200 levels, which is almost 60 points from here, which is a pretty good risk reward, 1:6 risk reward here that we're talking about. And obviously don't sell it off immediately once it reaches that level, because another thing that I'm looking here in Nmdc is that there is a major resistance because of which it got rejected. So this is the resistance that you're looking at. Now if it crosses this level of 200 levels, then the next target I'm looking forward to is around 300 levels in this stock. Now that's the target 2 that I'm looking forward to after it crosses 200, right? Now don't get really sold off by these targets that I'm telling you. Always first look at the stop loss, see if the stop loss is worth your money that you're going to risk, and only then invest in that stock. Okay, now looking at the fundamentals of this company, again, as I said, this is one of the lowest, this is one of the highest, not highest, but this is a really undervalued stock in terms of ROC and the PE. Now usually a stock trading at 29 PE at least has to trade at 20 PE or 29 PE, but it's trading at really 3 PE, and market cap is 40,000 crores, whereas company has been doing sales of 15,000 crores and has been making profits 6,000 crores, right? Now that's pretty undervalued for this company, and of late it has been doing really well. Obviously it's commodity driven, it's a commodity cycle, that's why it's been doing really well, but I expect this company might still benefit from this commodity cycle that's going on, and this might not end anytime soon, the commodity bull run in the commodity businesses, right? So this stock here is looking good. The margins have improved in the last few years, and overall this is held predominantly by the government. I think the President of India holds most of the shares, but otherwise also we have FIs and DIs holding also around 26% in this company. Right now, this is the last stock that I want to discuss, Nmdc. Right now, remember one thing before you invest in any of these stocks. Now, most of the stocks have a 10% stop, so you can go ahead and invest 10% of your overall capital in the stock. But remember, you'll lose 1% of the capital, and by any chance, if these stocks hit your stop loss, please exit those stocks. Right now, it is, I started off the video when I mentioned it is possible to time markets, but when you're trying to time markets, like how we did in Shraddha Cropchem or how we did in Network 18, Gravita, there's so many stocks that we spoke about and which have done really well. Now it is possible to time markets, but in case it doesn't go in your favor, it's very important to stick to your stop loss and exit the stock that you invested in. Okay, so Yeah, so these are the four stocks: Avanti, Jayantagro, Morepen, and Nmdc. So if you ask me in terms of my conviction, Morepen, Nmdc, Avanti, and Jayantagro in terms of the fundamentals plus technicals combined. So Techno Funda, if you compare, so that's my order of conviction. You can go ahead and invest. So you have four stocks, 10% in each, 40% allocate. And if you already have Shraddha Copchem 10% allocated, well and good. Then you have five stocks for you already this new year, which might do very well, which might give you good returns going forward, right? So every weekend I'm planning to do such videos. So in case you do like my videos, don't forget to share it with your friends and colleagues, and don't forget to subscribe to my channel and motivate me. So we are around 700 subscribers mark. So probably this year I'm looking forward to at least a 5,000 subscribers mark. And in case you do really like my videos, do really like my analysis, share this video with your friends and help my channel grow. Okay, so until then, until I see you in another video, take care, stay safe, and trade safe, and keep your stop loss, and stay healthy as well. Thank you. Bye bye. I'll see you in another video soon. Thank you.